Hello, everyone. I'm Marty Pospisil, and I am broadcasting to you today from the Chiang Mai region in northern Thailand, thus the beautiful tropical background that we have here. And I'm just about to load up my presentation. Oh, here comes the boss. Say hi, John.
Hello.
So we're enjoying it at Pisau's house here, and that's Jami's sister. And let me get started now on the broadcast. Okay, so welcome, first of all, to 2025. Very exciting year for us in real estate. And we're going to see some really, really strong activity to set the stage for what I'm about to present to you. It's going to be one of these years that we've all been waiting for. The old adage I've heard, survive for 2025, I think is going to be the case. So let's jump right into it here. Again, I'm broadcasting from northern Thailand in the Chiang Mai region. Beautiful, beautiful area here. I'm here in Pisau's front yard. We've been here for a few weeks just enjoying this beautiful culture and food, the massages, the scenery. It's just been absolutely wonderful. So highly recommend it if you haven't been here yet. So in the stats, let's look at what's happened last month. As you can see, for detached activity, sales activity year over year, we've got a 31.4% increase for houses detached in the greater Vancouver area. Benchmark price from this time last year up slightly at 2% for detached houses, and the benchmark price from last month is pretty well the same. No change on houses. For attached townhomes and half duplexes, the sales activity from this time last year up 56%. So a big jump in activity from December last year to this year. Prices are up 3.4% for townhomes, half duplexes, and the price is about the same since the previous month. Now, if we go into apartment condos, you can see the sales activity is up 24%. So a good jump from this time last year. Price is the same from this time last year and about the same, a 0.4% drop from last month. So pretty consistent pricing across the board. Not a lot happened in December. So that's reflected in these stats. So jumping into the metric I use to show the activity in the market for each product category, I use the sales ratio. And as most of you know, that is, of course, the absorption rate of product into the market that's selling on a monthly basis. So if that sales ratio is less than 11% towards the bottom of the chart, we are in a buyer's market. There's downward pressure on pricing, and the buyers rule the market. If we're between 12 and 20% sales ratio, we're in what we call a balanced market, and it's not favoring the buyers or the sellers, and prices are staying pretty consistent. But if we jump above that magic 21% sales ratio, we enter into a seller's market. There's upward pressure on pricing, high demand on product, multiple offers. That's the kind of exciting market we have seen in the past. We haven't seen it a lot in the last couple of years, and we're about to enter into that territory again. Let's start with the stats for the various product category. Detached houses, west side. So last month, if you recall, we were at a 10% sales ratio. And this month, let's bring up the stats for December. We are, surprise, surprise, at 10%, very consistent. At the upper end of that buyer's market range for detached houses, Vancouver West Side. If we jump into condos, townhomes, Vancouver West Side, we can see last month we were at a very strong 17% in that balanced market range. And bringing up the stats from this past month, we've jumped up, interestingly enough, in December. Now, that's a telltale sign of what we can expect for these next couple of months, with the market actually starting to increase in December at 20%. So we're still in that balanced market range, but right at the top of the range, just before the 20% plateau, which pushes us into that seller's market for condos, townhomes, Vancouver West Side. Watch that one. That's going to be hot next month. Condos, townhomes downtown. Last month we were at 13%. We bring up the stats for the previous month. We are at 15%. So again, an increase in activity, still balanced market category, but increasing in activity in December. That's pretty rare. If we go into the east side for houses, you can see last month we were at 13% sales ratio. Bringing up the stats, we are at continuing 13% in that balanced market range for houses, east side. But if we jump into condos, townhomes, last month, we're at an incredibly busy 25% sales ratio. Bringing up the stats for this past month, we are at 28% now. We are in very strong sellers market territory for condos and townhomes on the east side of Vancouver, interestingly enough. And that's in December. Now that we're in January, we're going to see those stats take off even more. So if we look at overall for BC, you can see that middle band is the balanced market range. We've been hovering along the top of that range. And in January, you'll see most of the product pop out into seller's market range, probably towards middle of the month, maybe towards the end. And what does that mean for prices coming up in the future? If we look at that average price graph, you can see we're hovering around that peak pricing that we had over the last couple of years. There's been a few slight adjustments, but that's going to come back very strongly in the next few weeks, months. And so we're fluctuating pricing. I'm pretty close to a collector road here, and there's some motorbikes flying by up to Pi without mufflers. So that's what you're hearing in the background. If we look at the 5-year trend for Greater Vancouver, again, you can see these prices have been fluctuating around the peak, and we are nearing that peak again, and we'll cross it very shortly. So prices are on their way back up. Let's look at the forecast for spring of 2025. I love that photo of the long-tail boat. Let's look at the drivers. Of course, green are market enhancers, red are market price deterrents, and orange in the middle are transitioning drivers. So if we look at consumer confidence and buyer demand, we can see with those rates falling, we've got that pent-up demand from the last 4 months over summer. The buyers are getting ready to jump in. Once that starts happening, there's going to be tremendous activity. Inflation and the economy. Inflation is it's actually at 1.9, but it's between that happiness band for the Bank of Canada. So we're good there. Economy we'll talk about in a little bit. Cost of borrowing. The reason it's still transitioning now is we've seen those variable rates come down along with the Bank of Canada overnight target rate. That's good, but the fixed rates, as we'll chat about shortly, are bond dependent. It's a little bit more complex before those start changing, but it is changing for the better, and the rates are dropping. Okay, inventory levels are low now for this time of year. That's cyclical. That happens every December. We get a drop in activity, and then in January, towards the end, they start to build up. February and March as well. So, confidence, consumer confidence, buyer demand is all good. Let me just pop back to that one slide. The unemployment slide, you can see we're at 6.8% for Canada, 5.7% for BC. So again, no major changes there. Retail sales are still up. If we look at the rental report, average rents are about $3.09 a foot. That's down about 4% from last month. And you can see that trend in the graph there. It's starting to stabilize at about $2,300 a month. Not much difference between furnished and unfurnished. Now, under construction and completions, you can see that yellow line at the top. We've got a lot of product under construction. And these are the builders and developers forecasting that future demand for our market this year and next. And they're building like crazy. So there's a lot of product that's going to come on the market, new product, very shortly. Something new that's probably the alternate discussion of increasing buyer demand. As of January 1st this month, the BC home flipping tax is now in effect. So realtors and buyers need to know that this tax is a little different from the federal property flipping tax. Here's how it works. The tax applies to income from sales of residential properties or pre-sale if you're buying in a pre-sale building, or assignments if you've assigned a pre-sale, if it's owned for less than 730 days or 2 years. So if you're less than 730 days, it includes properties bought before, of course, the January 1st deadline. You want to hang on to those properties for a couple of years if they've jumped up, unless you're comfortable paying that 20% tax. It's 20% on the gain of the sale, okay, on the lift of the property. And the tax applies to anyone, individuals, corporations, partnerships, or trusts, and that's sales within BC, regardless of residency. So that's good to know that's in effect. There are exemptions for primary residences, of course, your own home, but there are certain conditions that are attached to that, which you want to check on. Okay, back to some other important factors. Inflation is now at 1.9%. Slight drop from last month at 2.02. There's Tiff Macklem. He's very happy because that overnight target rate now has been adjusted to 3.25. Big drop this last month of 50 basis points. So that's an immediate benefit for variable mortgage rate holders. But watch the 5-year bond rates to determine how that's going to impact the fixed rates, okay? Because the fixed rates are dependent on those bond rates. So borrowers are getting excited because those rates are dropping. That's all good news. And after 6 months of rate cuts, the overnight lending rate dropped from 5% to 3.25. So that's significant adjustments down by the Bank of Canada. Talking about Trump briefly, the threats of the 25% tariff sort of are two different sides of the argument, how that's going to impact our market. It could negatively impact our economy, bringing bond rates down, and that would in turn bring interest rates down. So that's actually a good thing. But if the trade war ensues, if that does happen, and inflation rises, we might have a discrepancy between our dollar and the US dollar, and that could weaken the loonie, causing inflation. Bank of Canada raises the rates. So better for Canada if no tariffs. Hey, listening, hopefully, maybe he watches my broadcast, I'm not sure. Consumer price index, again, here's where we are now in that happiness band. We're actually just below it at 1.9%. So we're doing very well on the inflation front. And we're pretty close to our neighbors. We don't want to be out of sync with the US. If we look at where they're at 2.7%. So we're under percent discrepancy. They were at 2.6, so they had a bit of a jump up. Our overnight target rate's 3.25, and their overnight target rate is slightly higher. Sorry, I blocked it with my photo there. But the important part here is if there is a divide between the Canadian and US rates, money tends to go where the rates are higher. So this will put downward pressure on the loonie if people start investing in the US. So that's something we want to keep an eye on, and I'm sure Bank of Canada is. Cost of borrowing, when overnight rates drop, as I mentioned before, the variable rate mortgages drop immediately. Fixed rates fall when bond yields fall, and increase when bond yields rise. So that's the difference between fixed and variable. The difficulty now is growth and inflation forecasts are unclear as we go into 2025. We're kind of in a politically dynamic environment now, and we really don't know what's going to happen with the economy or inflation. To be perfectly clear, that could change. That could change very quickly. So let's jump into that. And tariffs on Canadian imports to the US could mean a loss of 1 to 5.5% of real GDP. So it's significant. So if we're looking at the new mortgage rules, which is a good thing, I think, for our market, they're targeting the younger first-time buyers to help them get into the market. That's good news. We're talking about price caps have increased from $1 million to $1.5 million, and 30-year amortizations will be available for insured mortgages for all buyers, investors, and even pre-sales. So that's good news. And that came into effect December 15th of last year. So they are in effect right now. Good news for us. They are in effect right now. So cost of borrowing, we can see the forecast is really unpredictable as we go into next year, but the overall consensus is rates are going to continue to fall, making homes more affordable for buyers. Lower rates mean lower monthly payments. Mortgages can be larger. Buyers can borrow more money, so they have more buying power, and buyers qualify for that higher mortgage. Okay, so that's all good news when the rates come down. The buying power for today's cats, let's look at that. Quick calculation, if we take the current 5-year discounted rate at 4.29% with a 25-year amortization and monthly payments, we can see that we would be paying about $542 per 100,000 borrowed. Okay, that's the rate today when we are calculating our purchase power on the rates. And of course, the more they drop, the more we are able to drop that purchase power for our purchasing cats inventory levels. Let's look at those. No surprise, December detached houses down from 628 to 486 on the west side, down condos, townhomes, typical for December, significant drops in houses east side. So that inventory drops off and stays low until people start to list in the new year. And of course, condos, townhomes in the east side as well, down from 582 to 385. So no surprises there. And if we look at what's next for prices, this is really the most interesting thing to look at. In conclusion, we know that our real estate market is impacted by mortgage rates, inventory, and consumer demand. And those are the three biggest things that we watch to determine how active our market is. Inflation is behaving well. We're within the Bank of Canada happiness zone. So that's all good. Bank of Canada may be done with those big jumbo cuts of 50 basis points, but they are going to continue to lower that overnight lending rate, ideally to reach that 3.25% level. That's the goal. Inventory is low and it will increase next year. All good. So in conclusion, that pent-up demand is ready to release. I think a little bit more of a drop in rates, maybe to 3.9%, would be great. That's when people will start jumping in again, getting below that magic 4%. We're at 4.29 for 5-year fixed right now. The variable rate mortgages are likely to continue to drop as the Bank of Canada continues to drop that overnight lending rate. And the fixed rates, as I mentioned, are a function of bond yields, which of course are dependent on inflation and economic growth. Okay, so as long as our economy stays stable, we're going to be okay. We don't want any major changes that way, because that will of course impact the dollar and inflation and the rates. They're all tied together. And of course, looser mortgage rules that I just talked about, that's going to help our market as well. So the stage is now set for a record year to begin. Everything's looking good. 2025, I think, is going to be met with great buyer activity. Expect some good price gains this year as that market gains momentum. That's my market update. You can find this video on YouTube, Instagram, and Facebook. And if you're wanting podcasts, it's on YouTube Music, Apple Podcasts, or Spotify. And I wanted to wish you all a Happy New Year. There's a couple of shots I'm including here from Thailand. That's a tuk-tuk that we ride around in Chiang Mai and Bangkok. And of course, that is Koh Tao, one of the famous diving islands here in southern Thailand. Beautiful little island. These are Chum Tong waterfalls in the Chiang Mai province of northern Thailand. Here's a shot from Krabi. This is a typical rice field where you see they're planting that rice in the background and flooding the fields. Beautiful scenery here. And that is the 10 Moons Resort in Koh Lipe. Beautiful, beautiful island as well. And we just attended the New Year's Eve Lantern Festival in Chiang Mai. The lanterns are made of rice paper, and their release is often accompanied by prayers and wishes for the future. And accordingly, I wanted to wish you all a Happy New Year and a very healthy and successful 2025, filled with everything that your heart desires. I wish that to you and your family. As they say here in Thailand, Sawati Bimai Kap. Happy New Year.